Mic check, 1 2 1 2. What's going on, everyone? This is Jordan with Conquer the Markets, getting ready here for our live stream. Good morning, good afternoon, good evening, wherever you are in the world. I am so glad that you are here, whether you're watching this live or on the replay. In today's session, we are going to be talking about what would it take, what would the catalyst be to cause Bitcoin to make new all-time highs in 2023 And without that catalyst, there being no chance that that is going to happen. It's a serious discussion. There are a lot of analysts out there who do believe, in fact, that Bitcoin is right now headed towards new all-time highs in 2023. We want to be aware of all sides. At the end of the day, we want to know what side to be on, when to be in the market. But at the same time, we want to be aware of all different perspectives. If you claim that you have the truth, the markets are not for you. Let's take a look at what's currently going on. And we see that Bitcoin, after the Federal Reserve began winding down their quantitative easing purchases, has since entered a bear market. The rate hiking cycle began then in March. And then you see a bigger and further leg down. The Fed has not yet stopped raising rates. Actually, the market this morning, we're seeing a bit of a melt up occur in the equity markets. It's just like each and every day they seem to be bid. And during that, I think that's causing expectations here that the Fed may actually have a potential live meeting June the 14th with another 25 basis point rate hike potentially on the table. Now, the Fed speakers seem to be hinting that they're setting up for a pause. And not only are they setting up for a pause, that they are adamant that they're going to keep rates elevated throughout 2023. The market currently is pricing in 75 basis point cuts into the end of the year. If that were to be happening, that would suggest that likely we have entered either a pretty severe slowdown or worse, a recession. And currently you see that Bitcoin over here is off of the lows, about 100% off of the lows. And that's before the Fed stopped tightening. It's important to remember that the low of the bear market occurred off of the last rate hike. And then you saw why quantitative tightening was running a massive 4x rally off of the lows until entering that period of accumulation, consolidation before the bull of bulls was ready to run into that bull market breakout and then shoot the sky. Now, it's true that this cycle saw massively diminishing returns compared to the previous cycle before that, which had seen diminishing returns to the cycle before that. What was occurring during this massive move off of the lows, and I think this is a bit of an anomaly. This is about as black of a black swan that you can get. Global lockdowns due to a virus that was spreading throughout the world. A lot of fear, a lot of uncertainty. And this was definitely an anomaly. It caused Bitcoin to come down off of its massive move off of the low and come in and go ahead and test down towards those lows. You're looking at the 3-day right now. So because you're looking at the 3-day, you're missing that massive wick down all the way into 32,000. It went ahead and tested that lows. A lot of people were really uncertain what was going on. By the way, if at any point in time you enjoy being here, go ahead and hit the like button. Really appreciate it. If you're new to the channel, welcome. Make sure that you do subscribe and hit the bell notifications. Some of the analysis shared in today's session is going to assume that you put the work in regularly, that you understand how we have set up our charts and why. This is not going to be one of those sessions where we go over from scratch and get everyone caught up. This is an important session. I hope you're ready to go ahead and put the work in. Great to see everyone here today. All right. So there are a lot of people that are looking for a move up towards the all-time high in 2023. Right now, I see that Bitcoin is consolidating in this downward sloping channel. And by the way, a downward sloping channel, when you do break out to the upside, is quite bullish. You can see overhead, we have two areas of resistance. Again, how we derived, people might look at this line and be like, how does that end up there? Why is there one down over here? Not understanding yet the symmetry of the markets, but I will just go ahead and show you so you can see all the touches on that lower line. And what's neat about it is that you see the symmetry throughout this channel. We are into resistance right now. Breaking above it brings up channel resistance. Also just above us right now, around 31,000, 32,000. A break outside of this channel would be a bullish event. Would it be enough to send us to new all-time highs? That is the question. And will it happen before the halving? A lot of people say because of the macro, because of cycle theory, not four-year halving theory, because of cycle theory, they're looking for some type of melt up into 2024. By the way, we are getting close to D-Day. That is the, when everyone has to get their ducks in the row and when the U.S. has to raise its debt ceiling limit. We are just a couple of weeks. That date was given by Janet Yellen, U.S. Treasury Secretary, as June the 1st. I believe it's now June the 5th. It is variable. The clock is now ticking. If there were to be a default, and I would imagine the odds of the U.S. defaulting are extraordinary. They're not zero, but they're basically that. They're just not zero, and anything could happen, It is the Matrix after all. And if that were to happen, the only response would have to be outright quantitative easing, a massive move by the Federal Reserve, having to go from currently tightening, raising rates, not only raising rates, pulling away the balance sheet through quantitative tightening, they would have to flip to the long side. If you remember what was going on over here, this is the bottom and this is the bottom towards the top. This is the bull market breakout. We're going to be looking at those from many different vantage points to come. What happened and what was happening over here. Well, let me not get there yet. Let me go ahead and just first talk about a couple of things that are happening within the market. We're looking at Tether reporting Q1 profits higher than BlackRock, $300 million. BlackRock has been operating for 30 years. Tether, a decade old. Higher Q1 profits than Netflix, Starbucks, Cash App, PayPal. And what's really interesting and neat is that Tether will be allocating 15% of net realized operating profits towards purchasing Bitcoin. And that's neat. Now, this is a lot different than Luna. Do not confuse the two. Tether is taking its profits. How does Tether earn profits? Tether right now holds a bunch of treasuries. Those treasuries are paying between 4 and 5%. It is, you could see, therefore able to take a portion of its profits and dollar cost average into Bitcoin. And that will continue, by the way, for as long as the U.S. has those rates elevated. They expect, and they will tell you, that's throughout all of 2023. They expect that the economy is going to need that elevated tightening to slow it down. If you look at the equity markets right now, you would say, oh, equities are acting like that is going to be the case. If you look at the bond market, not so much. And we know that the market is pricing in 75 basis point cuts by the end of the year. So assuming that rates stay elevated, Tether will be on the bid all throughout 2023. And they are a large buyer, dollar cost averaging. It's really good for Bitcoin. Is that enough to take Bitcoin to new all-time highs in 2023? That's the question. Past cycles have shown that before they're having, price has been able to kick up all the way to this level. This level is the 0.786 retracement fib. And in each of the previous two cycles, that was reached. The goal was claimed prior to the 2024 halving. Now, is Bitcoin going to be able to do that in this situation? That remains to be seen. We were not, outside of this right over here, I'm just going to highlight this one area over here. We had basically the shortest recession on history. That was in April 2020, right before the halving. That was because of, obviously, the global situation, global lockdowns. Bitcoin has never been into a situation around the halving where it is either in recession or into a massive slowdown. Now, that may or may not be happening. We have to watch out for that. It is possible that this time Bitcoin is able to, before the halving, go ahead and pierce new all-time highs. And it's also possible that Bitcoin is not able to reach that goal before the halving. And not only that, it's possible that it comes down and tests the lows. Now, let's keep going over here. And I want to talk about bull market breakouts. And I could show you a couple of lines over here. You have this line over here. This is the last. You're all familiar with it here on a live stream together. We called it in real time that July 2020, and it was the bull market breakout. After the breakout, we had this nice little retest, a moment of truth. Price was able to hold and then break out into the bull market breakout. What was going on there except for a nice trend line break? We're going to take a look at what was happening with the macro in 1 second. Before we do, I want you to see that this line over here, it's this outer line that needs to break in order to ignite the last bit of resistance before that bull market breakout is actually intact. I'm missing up some lines over there. I'll have to go back and re-edit them. I don't like that. Let's come back over here, and I want to show you back on this chart what was happening before we were able to go ahead. And a lot of people also are thinking that right now what we're seeing is a lot of behavior that is similar to what happened over here. This is the summer of 2021, and off of that 30K low, Bitcoin was able to go ahead and push up and make a new all-time high. It was able to go ahead and put in a 125% gain in a matter of about 3 months, and it did it, let's say, on 2 waves, wave 1 and wave 2. Now, there's a lot of people think that what's happening right here, right now is very similar to that price action. Now, if you actually just take even a fractal and move it over, you could say, well, yeah, that actually does look very similar. And that might also point to this wave actually being done. Now, people could also say, and if they did, I would have to, agree with them and say, well, this over here only happened because of an anomaly. This was the U.S. banking crisis. And likely, if we did not have that banking crisis, that support would have held. And this could also be just wave 1 ending right now. And we could be getting ready to put into a second wave. And that second wave, by the way, if that were to happen, if we were to see a resumption out of here, and we need to see a resumption out of here, could potentially even take us towards that 0.786 retracement fib. Is right around $50,000. So one thing that was happening over here that is not happening over here, though, however, is during this time we were seeing, here's wave 1 and wave 2, we were seeing rates down at 0 and quantitative easing occurring month over month, right? $1.2 trillion a year. And right now we are actually seeing rates not near 0, very elevated. The Fed is undergoing a tightening portion of the cycle. And instead of quantitative easing, we are looking at balance sheet running off instead of expansion. During this period over here, when the bull of all bulls broke out until its bull market, what had happened is rates were just cut down to 0, just about 2 months earlier. And not only were rates cut down to 0, we were seeing a massive quantitative easing program running. We were seeing $1.2 trillion a year of assets being purchased by the Federal Reserve, and that was coming off of $4.1 trillion. As Jerome Powell put it, they flooded the system with money. Not only did they flood the system with money, they were actually out there depositing into people's banks, giving businesses loans that did not have to be paid back. There was an excess of liquidity out in the market, and that showed up everywhere across the markets, not just in Bitcoin. When that was happening, that excess of liquidity did flow into Bitcoin, and it ignited Bitcoin to be able to make that type of move off the lows. It is not happening right now. We are actually looking at adverse circumstances. We're undergoing a tightening cycle. We are headed towards a potential slowdown. market pricing in rate cuts by the end of the year. And outside of any type of quantitative easing entering into the market, the odds of Bitcoin being able to go ahead and break out and make a new all-time high in 2023 are about, as I would say, as close as to the US government defaulting. It is possible, but at the same time, it is highly unlikely. Now, it's true that we could see something happen. It doesn't mean that the US has to default. We could see more banks under pressure inside the US. We could see a similar event that just occurred where the Federal Reserve had to expand their balance sheet, and you could see Bitcoin following the liquidity jumped up. We could run into a situation like that. We could also run into a situation where China, as you all know, is opening up after their massive zero COVID policy and lockdowns, bringing their economy almost to a standstill. They have since now reversed policy and are opening up. And that's largely what happened off of the lows over here. Is China was entering the market. There was stimulus going on, and you saw global liquidity rising as the US dollar was coming off. And that was very favorable conditions for not only Bitcoin. You saw equity markets thus far put in their bear market bottom as well. Now, that recovery in China is not going so well. It is not only is it not going well, also those liquidity injections have really waned. We looked at just in yesterday's session, the latest injection was $36 billion. That's not really going to cut it to send Bitcoin to a new all-time high. Now, they are in a little bit of trouble, and potentially their banking system may even be worse than the United States. And it is possible there is some type of an event over in China that could cause a massive injection of liquidity. It doesn't need to be the Federal Reserve per se that returns to the bid as far as the balance sheet expansion. It could come from somewhere else. China could be one of those catalysts, but without that type of event occurring in the market, the odds of Bitcoin being able to even, I'm going to say, tag the 0.786 retracement fib 50K, that is questionable under these current circumstances that we're in, consulting the macro before the halving. And if we're going to go ahead and not only take that out, tag it, take it out, but make new all-time high, it's going to require a complete 180 in the current conditions that we're seeing in the market. Now, you could look at Bitcoin, and I'm looking at previous cycles. In light blue, we have the 2013 or 2012 cycle. In blue, we have the 2017 bull market high, 2016 cycle. And then we have in white the 2020 halving, 2021 high. And lining them up from the halving, you could see that, well, a lot of people are pointing to the similarities of Bitcoin peaking at the same time at the previous cycle. The bottom was not the same off the halving, but you could see that they are turning up around the same time. And this is where last cycle, 4 years ago, that Bitcoin put in a high and wound up entering into that accumulation phase until the halving. You know that I pointed out, these are called underbelly breakouts, the line that I'm highlighting right now. And I talked about, as that was occurring, anytime that's occurred in the past, that has been the low of the bear market. And a lot of people at that point in time, that was a little bit early. They were still quite bearish, looking for a price to test or retake the lows. Since then, price has again come 100% off the lows, and now people are quite bullish. And I'm saying, well, watch what's happened in the past. Although we've never broken those underbelly breakouts before, or I'm sorry, those underbelly breakouts once occurring, prices never come and taken out the low before. We have seen in the past a little bit of different behavior happening. I've pointed out by the time that price pierces this, that is usually or has been a good time to enter into accumulating Bitcoin. But one thing that I'm noticing over here is that currently the distance, you can see the distance in this area between that underbelly trend line and the current price action that we're looking, and it's significantly suppressed. You can see over here that price was 52% off its low. or I could say off its high a little bit higher, or about the same, 50% off its low. Last cycle, significantly more. It was about 52%, 60% off the lows, and then even as high as 100% off of that trend line. It looks to be pretty significantly diminished right now. At its height, I could say that it's about 28% off its low. And you could see that price didn't come close to touching that trend line in the first cycle, in the second cycle. Now, this was, I do believe, an anomaly. This was the U.S. banking crisis, but price is coming back into that trend line right now and or getting close to testing it. And it seems that the volatility to the upside here is a little bit diminished compared to past cycles. Again, it's why I lean towards outside of something. Let me go ahead and refresh this page. Maybe that would be the way to get it. Outside of something changing, I think that past cycle behavior is actually in jeopardy over here, and we're more likely not to go ahead and tag the retracement fib as in previous cycles. Now, I feel good about that in so much as that when we first introduced these retracement fibs, that was back in, I think, January. Price was right around $20,000 at that point in putting this up. People were like, didn't want to see or hear that. And now they just expect that it's going to happen. And we're saying, well, not so fast. Let's be a little bit of cautious. The pink trend line, we're coming off of this line, right? Hypernova, thanks for bringing out both of those things. So let me look at it first. Let me zoom out 1 second with you all. I'm glad that those lines came back onto the chart. I wanted to look at them. Now, when we talked about Hypernova, the 0.786 retracement fib being tagged, that occurred both times prior to the halving. So I could say in the last cycle, even though that retracement fib was tagged, price did not break above the bull market breakout until after the halving, but that was not the case in the cycle before. Now I have the lighter pink line. That's the bull market breakout, the last bit of trend line resistance before the new all-time high. That occurred right before the halving. It could happen again right before the halving. That lighter trend line right now is coming in underneath, by the way, the retracement fib of 0.786. It's coming in right now, let's say around 44,000, downward sloping. And then we have the heavier resistance. This is a one-touch trend line, right? It is the symmetry of the market going all the way back, 10 years. But at the same time, there's only one touch thus far. The stronger trend line, you can see that this is where it formed resistance. We had a couple of touches throughout the formation of this bear market. And that is coming in right now around 34,000. 34,000 is an interesting level because in yesterday's session, we talked about, and for good reason, this trend line resistance. So if you're looking at this trend line that I'm highlighting right now, that was explained in the beginning of yesterday's session. That is if we're able to resume out of this correction. And again, you might look at this as wave 1 into wave 2, or you might look at this as an anomaly. And this is only wave 1, and we might be getting ready here for a resumption out of this pullback whenever it ends. If we resume out of that pullback, we could, I think our first target is these two areas as discussed yesterday. That is also 34,000. That trend line, Hypernova, is coming in at the same place that this darker pink line is coming in. And I think that would be a place to be looking to take some profits off. If able to break above it, that does open up further upside. If able to break above that 34,000 resistance at that point in time, then I think that there's a higher probability that price will be able to absolutely have a strong opportunity at taking the 0.786 fib. And then we would have 3 times it before the halving, the retracement fib has been tagged. But there's a lot of overhead resistance. Not only is there overhead resistance right now, price is currently obviously in what could be a bearish structure forming over here. We looked at this yesterday, and you can see that price right now is currently in the portion where if it retests and makes a new lower low, then that is the completion of a bearish structure, and we could be looking at further downside price action. where that would be and where we will come into, that remains variable. We have a couple of different levels to watch out for. So let me start by showing first this trend line, this dotted trend line over here. You can see that that is the December low, and then where we bottomed out during the U.S. banking crisis. That's not where that line came into existence. I've showed you before. Actually, the prime of that trend line, where it came into existence, was the high of June 2019. That was the 4x off of the December 2018 low. Price then, you could see touching it over here into March and into April. And that trend line there, if you go ahead and you just make a parallel channel off of it, right? That trend line then, now I need you to, I could extend, if you extend this line out, you could see obviously that continues. So that's how we did this one touch trend line. And this one touch trend line over here, after price peaked into it over here, we then extended it out. And that's how we got that 27,000. If you haven't de-risked down during the bear market, if you missed 35,000, if you missed 53,000, this is your last opportunity, 27,000. That's why that trend line came into existence. And you could see, clone it again down below where we're coming off right now. It remains in play. If we are to see a breakdown of the current, whether you want to call it lower low structure that's developing and or potential Wyckoff distribution, we could be looking at an area over here, a 22% pullback off the high would test that trend line. If we did not hold over there, and I don't know, you see this trend line over here? I don't know if it deserves to have a green shoot over here, because if we broke down below that, it could likely be bad news bears. Now, a breakdown below that takes us likely into this trend line that I have highlighted below. That trend line over there is the bull market breakout. If we trade below that, then at that point, even though we called and saw the bull market breakout occurring, at that point in time, it would be invalidated. You can't just say that we broke out to the bull market, therefore that means new all-time highs and the low is in. You never know. And you have to be able to look at what is wrong. This is a 30% drawdown from the all-time high. Extremely healthy, by the way. If that were to occur and we saw a 30% correction, you would want to see the bulls defending this level. If they were unable to defend that level, likely things are going to get a little bit dicey. And the best case scenario then would be the previous cycle ceiling, 17,250 tested. Right over here, 17,250. If that was not to hold, at that point in time, we'll be looking at further downside targets. We have them from a couple of different advantage points, including this trend line that you're looking at right now, that trend line coming off the all-time high from the previous cycle, and then again touching in the 2021 first quarter highs into April, and then you could see it off the bottom. You could see that same angle, the same exact angle over here with the two touches. Price wicked under during the whole well, this is the BitMEX feedback loop, but during the global lockdowns, but it found support in that area. That's an area to watch out for. And then we got other ones that I don't even want to bring into the picture, because including what is the wedge. We could see this wedge, this descending wedge that price is currently breaking out of, very bullish. You could see the perfect touch of the resistance, the top portion of the wedge, confirmed into support, and price resuming up. It looks great as long as this area holds. If this area doesn't hold, that was a descending wedge breakout and or failure. We could be targeting the bottom end of that support and or lower, but we don't really need to work about that right now. Yep, closer and closer. I mean, at the same time, and we could talk about it also from a positive standpoint, because, you know, it deserves to be talked about. We are also very close. This is our linear view over here. This is our intricate work. We could see that this line over here, currently still holding, price not able to close below it. Price has not been able on the daily time frame up to close below it. But more importantly, what I want to focus on is this trend line over here and just extend this out. And a break above that trend line, that then nullifies any of this current PA that's taking place. That only not nullifies it, that sends us off over here as a resumption upwards out of this correction. And then we get to look and be targeting towards 34K. 34K we just looked at from, was that 44K I was looking at? Hold on one second. I just got a little bit thrown off. This line is coming, 34K. All right. And 34K came in from that trend line that we looked at in yesterday's session as well. So 34K, if able to resume out of that, would be the first area that we would be looking for as a target. Being able to break above that trend line at that point in time, then that would open up even a look at 49.50K. Positive. So that's what we're looking at. We got to keep an eye while we're keeping an eye on our downside. Don't forget, we began keeping an eye on the downside on these breakdowns that occurred over here in this area. And so far, we've been in correction over here. This is going on now for about a month. And price is only off about 12, 15%. It looks good. It looks healthy. If we're able to resume above this trend line, at that point, we're going to see a resumptions towards the trends in place, and it's going to look good. This is Friday's CTM Summit Team Meetup agenda. We will be getting ready to hold that directly after the live stream. We will then get that upload out to CTM. You can see here going on 16 days we've been out of the market. This is Bitcoin and Ethereum over here. And you can see that this momentum has just waned and upside momentum. And now price is pulling back. If price is able to go ahead and resume out of this to the upside, we are still on the 8-hour time frame, closer to entering to the long side, which right now would be just around 29,000. 29,000 is also that important area. All right, over here, I'm highlighting it. It's just 29,000. That is that area of resistance that we were looking at. It was the fourth repair of this. You can see that's where after the Luna collapse, price found its support. It then became resistance. Breaking above that and outside of this pullback, that would send us long on the market. Until then, and this is where it really matters. This is where it really matters. You have to have patience to trade successfully. If you've been poking around the market that is in an uptrend, right? We're in a strong uptrend. When is this going back to? Let me at least come back to 2023, right? 2023, we are looking at Bitcoin taking longs underneath 17,000 when the majority of the field was absolutely bearish on the market, and throughout the first quarter taking some nice gains. Since then, price has not only gone sideways, looks like it's rolling over. It's quite healthy at this particular point in time. If we see a resumption out of it, if we don't and we continue to fall off, we will then be attacking on the downside. Now, this is where it matters. If you have been throughout these last 11 days, how many days is it? I'm so sorry. I like to be accurate in everything that we're doing and know exactly what I'm talking. 11 days. These past 11 days, if you're trading 8-hour time frame, Bitcoin, Ethereum, you've been out of the market. That takes patience, that takes discipline, and that takes focus. Are you here to make money? Are you here to do it systematically? Have you spent your time developing an edge, a plan, and then and then working towards simply executing off of it? Or are you out there just like, I don't know, kicking off trades when they don't warrant them? You need to ask yourself some serious questions. Do you spend your time looking at charts, trying to force things, or are you spending your time reviewing your execution and making sure that you are executing according to the plan that you have in place with it? It's the difference between someone who's going to be wildly successful and someone who's never going to be. So right now, ask yourself some tough questions and focus in on it. I know that it's really cool and nice to say, and you know what? Bitcoin is going to make new all-time highs in 2023 because of cycles. Okay, well, what about the macro? What does the macro suggest? Do the conditions out there warrant it outside of any unforeseen event that will cause the Federal Reserve and central banks across the world to reverse course and go from not only tightening to all of a sudden be flooding the system with liquidity again? Outside of that happening, the likelihood of that of Bitcoin making 2023 new all-time highs, there's not much credibility in that. All right. So let's keep going over here. Let's look at Ethereum. It's in a very similar situation right now. Ethereum also in 2023, lagging Bitcoin a bit in performance, which is very unusual as Ethereum outperforms Bitcoin, but not too much, right? And by the way, 20% might not seem like much throughout the course so far, 4 months. Add a little time to that though, right? 2022, adding some time for profits to come in and compound, all of a sudden it makes a big difference. And starting off 20%, right? There you go. Just back, and back. And it just keeps going and going. Now, 20% is a good platform. You remember what happened in July into August of last summer? We were attacking on the downside like no one's business. And then all of a sudden, we got a buy signal, went nowhere, another buy signal, 52% gain. What's a 50% gain off of a 20% gain for 2000? That's 100% gain. Oh, compounding, staying on the right side. A lot of people look to put all their gains in on whatever trade they're in at this very moment. That is a losing formula. If you expect that you're going to make X amount of gains on whatever individual trade you're in right now, you are going about this in a way that is only going to lead you towards failure. There's no other way about it. Look at the win percentage on this. It is below 60%. Any one individual trade does not matter. You don't belong in any trade right now. Momentum, why in an uptrend, is currently waning. You could see that price is currently headed in a downward drift. Now we're much closer to attacking on the long side, right? Price were to kick back up over here above 1850, we will be entering on the long side on the resumption up out of the pullback. But trying to get cute and hoping that you're going to get lucky, that's not something that's going to go ahead and be able to help you constantly profit in the markets. Cardano over here does have a short position open. It has a hedge over here. It's why it's called the beautiful dance, because even though Bitcoin and Ethereum are out of the market right now, on the sidelines, waiting for further confirmation of whether or not they're going to be resuming trades towards the upside momentum kicking back up, or actually they're going to see price roll over, momentum roll over, and begin attacking on the short side. Now, you could see Cardano over here is already hedged on the short side. The daily looks a little bit different. The daily is seeing Ethereum short, right? Currently holding an open short position. Bitcoin is actually much closer to entering a short trade than a long trade. It's very interesting compared to the 8-hour, but it is what's happening over here on the daily time frame. 2 trades thus far in 2023 on the daily, but much closer over here now towards seeing some type of breakdown. About $800 away, 26,000 Bitcoin would be entering on the short side. Alexander, the waning momentum and sideways movement usually precedes a big move. Both signals get closer to zero, allowing us to enter earlier based on the momentum filter, just like what happened in January. And that is this area over here. We went from, and I'm going to point out the 8-hour, and I want to point out that same behavior you're talking about on both Bitcoin and Ethereum, because they were also trading both sides during that. So let me just zoom out over here and add a little bit more data so we could look at what was happening over there. Before entering the long trade in 2023, you could see that actually Bitcoin over here stopped out on this move down, right? Out of the market, waiting. It then started picking up, taking a couple opportunities at the long side before entering short. It went nowhere, was able to pick up the long. On Ethereum, you could see that happening really well as well, as it was able to trade both sides as price went sideways and that momentum waned. So we are coming closer to that type of behavior and area. On the daily, it's a little more bit pronounced than right now on the 8-hour. But as momentum dies out, we are getting closer and closer to be able to attack from both sides. Very good. Very good insight, Alexander, into that for sure. And even if we resume up a little bit and then come back off, if price basically continues sideways, that short entry is going to come a lot closer in towards market. So it's not just like an absolute. Like right now, price does not need to come down $2,500 for Bitcoin to enter the short. I mean, it would right now on this particular candle that we're in. But as time continues forward and momentum goes from going this way to this way, and that gets calculated in, that short entry is going to be rising up as well as over here. I don't know what happens to Cardano or anything for that matter, right? I mean, dollar cost averaging assumes that price makes a new all-time high, which may or may not happen. You simply do not know, right? And you know, I suppose the odds of Bitcoin being able to make a new all-time high are a lot higher than Cardano, but you simply do not know. So I don't know anything about that. I think that anyone who was buying and holding, for example, Cardano, let's see, let's see when Cardano really started. Well, let's go over here, right? This was a massive, massive, massive move for Cardano, right? You could see that if you were buying and holding, you would have made 30%. Or if you're trading it, people think that they believe that time in the market outperforms trading. That's not really what the data suggests any way, shape, or form. If you were holding Cardano and you were holding Cardano since 2018, January the 2nd, you have a 30% return. If you were trading it on the 8-hour, significantly higher. It's the same thing though with Ethereum and or Bitcoin. And you could see that time in the market does not compare to returns. Buy and hold return, magnificent. If you are holding since 2020, holding Ethereum, but compared to trading it, it doesn't really compare. So we trade. We have CTM 2.0 solutions on the 8-hour time frame, on the daily time frame for Bitcoin, Ethereum, and Cardano. The volume in each is such that together we could look at these. There are a vast number of solutions across altcoins. The thing is with altcoins, slippage is a big deal. And if you have a community of people using the same system, at that point, the slippage would go from something for one person that's already not good to bad. So we don't do that. Now, other major caps, you could say something like BNB, right? And I don't know. It's been more than a minute since I've looked at it. I'll pull it up right now. Well, I can't pull it up right now on the live stream with you. But if you want, tomorrow we'll look at BNB and check in on that progress. We focus on these three majors, and then we have stocks. FNG, by the way, holding another 7% open profit and up thus far 100% in 2023, continues to outperform we talked about since 2020, why not having Cardano or Ethereum type returns definitely outperforming Bitcoin. And let's go ahead and look at it like this. We could say that what we do execute on together is, whether it's the 8-hour time frame, buy side only, more than enough to get it done, or you're looking at the buy and sell side. Same thing on the daily for the same three. Buy side only is more than enough to get it done. We also, Ethereum, Bitcoin. Now, a lot of people are really focused on the cross Ethereum, Bitcoin, wondering who's going to outperform which one, when, and why. And for me, I look at it a different way. I mean, we have the solution. This is going back over here since 2020. I mean, these profits don't compete or compare with what we do against the US dollar, against Bitcoin, Ethereum, or Cardano. So I don't really see the value in it. We've talked about it, though, potentially if people were going from wallet to wallet, why they might like it. But again, and then you have stocks over here, and this is what we execute on together as a community. I mean, for the way that I look at it, and this is not the time and the place to really get into it, so I'm not going to at this particular time. By the way, 51 likes. If you were watching this on the replay and you didn't get a chance to go ahead and hit the thumbs up today, please go ahead and do that. Let's look at something realistic. I'm not going to look at, this is Ethereum trading the 8-hour time frame, and I'm not going to look at from 2020, which included a massive bull run on Ethereum. But I personally do not think from 2021 until today that the price action is anything special, especially after Ethereum topped, right? Ethereum topping May, June 2021. And the price action between now and then is absolutely nothing special whatsoever. Let me go ahead and take off this over here so we can take a look at it together. And then I want to focus on this. And yeah, I mean, so basically price has gone nowhere in the past year and a half. And during that year and a half, you saw some upside movement and you saw some downside movement. I don't think that PA is anything special whatsoever. It's not like we saw this. I mean, that's beautiful. That's special PA. This is not special by any means. And then, you know, if you're looking to compound money and you're looking at these type of returns, you're going to exceed whatever your wildest dreams were when you entered the capital markets. But let's say instead of going ahead and risking capital on any type of like lottery ticket, like the thing right now is, well, what's the next meme coin? You know, why? Because there's so much liquidity out in the markets right now that it warrants speculating in meme coins, right? Like right now, the system is flooded with liquidity and people are out there speculating across the board. Or is right now we're looking at Bitcoin and crypto in a bear market. And when the question is asked, like, who is still here, there aren't new people entering the space and or market. So it's a lot of the people that have had the fortitude to stick around. And if they're able to continue, likely when the next bull market does occur, they're going to be able to do some pretty spectacular things, because it takes not only fortitude, it takes a high degree of intelligence to be able to stick around. Now, is this the time and place where you should be speculating on altcoins and meme coins? Probably not. It does not make sense. And probably the people that are out there and got in before you into those hot potatoes are a lot more, let's say, apt than you are. But what about if you were using, and I don't recommend it because it's not needed, actually all that's needed is the buy side only. And during that period where we saw the market come off massively, there's still a nice gain on the buy side only. Buy side only, more than enough to get it done. But what happens if you were looking to speculate? What happens instead of looking to speculate on a meme coin, you were looking to do something like high leverage, like 3 times leverage, you know? And does that potentially offer more of an I mean, that's a big drawdown to me, 38% drawdown. Now, I know most people have been holding through the bear market and therefore have been holding through 75 to 90% drawdowns, and that's not a big deal to them. But to me, that's a huge deal. So let's put that down to 2.5 times leverage. 32% is a lot closer to what would be deemed for a high risk investment acceptable. And that type of return, do you think that you're going to be able to get that on a meme coin? You know, are you looking to invest $200 and pay $50 gas fees and hope that for some reason you're able to make a 200,000% return? Do you really think that's going to happen? Or do you think that maybe if you wanted to take risks, that it would call for taking perhaps even a calculated risk in order to be able to go ahead and do that? And what happens if you added a little bit more time? What happens if you went off the top of the last bull market, right? So we're including 2 major bear markets here and also a global crisis. I mean, that return is not acceptable by any means, shape, or form. But the return, does it justify that type of speculation? I don't know. Some questions to ask yourself, you know? But certainly be smart about what you're doing. And that means do not be speculating. This is not the time to be speculating whatsoever. I'm glad that, you know what, Ace, if it's understood and appreciated by, let's say 5%, then that's enough. So thank you for letting me know that was well appreciated and understood. So use cases for Ethereum? Is that what you're talking about? I mean, are you aware of the network effects of Ethereum, or what are we talking about when you talk about use cases, so I could follow the conversation about what it is indeed that we are talking about? Big up, Money Group. Appreciate that very much. Igual, all into cash. Patience is really hard. Yeah, so that's the truth of it. And right now, you're going through a period where price has been sideways, right? Because I could just go back over here, come back into mid-March, right? And price has been sideways. This is actually the recovery off of the banking crisis, right? And price over here has been sideways. And, you know, I think, and it's why I often bring up the new all-time highs on the account. So let's look at that because this gives really good perspective. So what I'm going to be pulling up is the high watermark, right? And what this allows you to see, and we'll look at Ethereum here, right? They're all the same. Oh, let me just make this into one. We'll look at Bitcoin. And what I want you to see is if I zoom out and I go all the way back over here and we start this in 2017, we go back all the way to inception, but in 2017, and it looks like that CTM 2.0 is simply up and to the right. And if you are trading this, your expectations are that you're just going to keep making money. But if you look at that in a different way and you say, well, the percent profitable is 40%. So that means 6 out of 10 trades are expected to stop out. And not only that, if you look at the blue line, which is when the account balance made a new all-time high, the majority of the time, this is not going up and to the right. This is going sideways, which means that the account is running sideways or in drawdown. The account is in drawdown every time you're running off the all-time high. And if you look at that, I mean, you have the 2017 bull market and prices running up, you know, at a rapid rate. But 2017, this is a bull market 2017, a massive bull market. And look at that. Price from June, or basically from May, but June all the way for 3 months going sideways. That means for 3 months, you have to have the focus, the fortitude, and the discipline to be executing off of your strategy, which means, you see, these times when you're out of the market, this is just flatlining. You're not in the market. You're out of the market. That means being patient and being able to stay out of the market when it warrants it. Look at this over here. This is just sideways. sideways out of the market, and price is not going straight up and to the right. The majority of the time is spent running sideways. Look at this period over here. This is December. It's just a couple of months out of the market, running sideways. That would have been, a lot of people would have really have been like to know when to be out of the market, right? How many people watched the price of Bitcoin come off from the December 2017 high, and then it came off in a matter of 6 weeks, 60%? Man, people would really have liked to know when to be out of the market. And here's a big period over here. Look at that price running sideways. Patience, discipline. There's nothing easy about it. And you should spend your time pulling up CTM 2.0 script and going over all periods, looking at consolidation periods, looking at drawdown periods, setting expectations, setting your expectations. So as it unfolds in real time is going to give you an edge in being able to stick through it. If you're spending your time out there just like kicking off trades for no reason, you're not going to be successful until probably you wipe out an account or two and come to the realization that you need to be serious about this. Bitcoin is going to make a new all-time high in 2023 is not a credible analysis. Now, it is possible it could do that. For that to happen, you would need to see a massive pivot in Fed policy or central bank around the world policy. That would include whether it was China injecting trillions of dollars or the Federal Reserve injecting trillions of dollars. That liquidity would need to come from somewhere. Right now, there's a lot of uncertainty in the space. Institutions are not accumulating Bitcoin because they're unsure of the regulatory, I wanted to say action of the clarification from the SEC. Right now, Coinbase is in litigation with the SEC, and they're asking them, listen, we've asked for clarification and none has been given to us. And basically the response is, well, none is going to be given to you right now. That uncertainty persists. This is not the time to be recklessly speculating in the markets. It is the time to be very calculated about what you do and how you do it. Let me pull up the 3 though, just so I could come back to this, because this is actually a template for all of CTM. We go ahead and save that and pull that off. So look at this. That they don't. Did they come to? I know that the Democrats inside the House were looking to pass some type of legislation to give them basically a blank override and bill for the debt ceiling. Was that passed, or are we currently into like a melt up portion of the cycle over here? Let's take a look at the equity markets over here. Let me refresh this page. Look at this. You got the NASDAQ coming into that green line, making a strong run at the resistance. I don't think that's a melt up, actually. A melt up would have to be, I'm going to try to find, maybe it is. Looks like that the August highs right now and resistance are being targeted. And potentially, if we get above this area of resistance, that becomes the third major repair of the breakout. This is the first major repair. It's the bear market breakout. The second is the purple. This line over here is the protection. This is a sell impulse triggering. And right now, price continues to ride this up. I'm very curious to what that looks like. There you go. This is the upper line of the wedge that I'm highlighting over here. I'm going to make this line a little bit darker over here right now so we can watch it. And we are looking at that descending wedge right now. So price breaking above here and clearing above it. This would be my expectation of where it would where it could top out and run into resistance. It's close to the psychological level, 14,000. And wow. That's all I could say about the price action in the equity markets recently. Michelle, your bull flag over here is definitely now you could see playing out and playing out lovely. Now, it doesn't mean that we're going to break above the resistance and or hold the close above it. But if we are able to break and close above it, that's the area that I would be looking at for resistance. A move into this trend line that we're looking at right now, which is also the resistance of what is a rising wedge pattern. Now, because we're in a downtrend and we are entering a rising wedge pattern, that is also a very bearish pattern, only if it triggers. The trigger is the bottom line over here, the sell impulse. So we continue watching and waiting. Could anyone see if we saw will buy and hold Pepe outperform CTM 2.0? I don't know anyone within CTM 2.0 that has any type of solution on Pepe coin, and that is because it's really new, right? I don't know. I've never pulled up a chart of Pepe, so let's do that now so I can take a look at it. I mean, here's the thing about buy and hold. It assumes price makes a new all-time high. That's the thing of it. The difference between buy and hold and CTM 2.0 is CTM 2.0 outperforms everything over a given timeline if it makes new all-time highs. And if it doesn't, then it obliterates it. Buy and holds, it just assumes that price has to make a new all-time high. Dollar cost averaging also assumes that for it to work, price is going to make a new all-time high. Now, with dollar cost averaging, it's a little bit different in so much as that you could get away with price not making a new all-time high. If you were dollar cost averaging throughout, starting at the top of the bull market and you continue to dollar cost average and your average cost is, right now about 25,000, I mean, if you're taking profits, you could take profit, but obviously it's a lot smarter than dollar cost averaging into the instrument to simply going ahead and looking at dollar cost averaging into a cash account when you don't belong in the market. Let me go ahead and show you what that looks like right now. Like this is since the top over here, and why you take one entry in 2022 on the long side and it's a 5% loss. Would you have been better off dollar cost averaging into Bitcoin, the whole bear market on a weekly or monthly basis and gaining that 25,000 average purchasing price? Or would you have been better off dollar cost averaging into a cash account? Going 100% of that cash account into Bitcoin, take a 4% loss, 5% loss, and then you're back to dollar cost averaging into your cash account. So now I have 100% of my purchasing power or 95% of my purchasing power, and it's growing because I'm dollar cost averaging. You could say, well, you're gaining more Bitcoin because you're dollar cost averaging. That's true. And your average purchasing price is increasing. That's true. But it's not as strong as dollar cost averaging into a cash account. And then with 95% of that purchasing power instead of a loss of 75% of your purchasing power, you need a 400% gain to recover from that. And then you being able to attack on the up. It's dollar cost averaging, buy and hold. They assume that something makes a new all-time high, and you never know. It's a strategy that maybe you could tell your mom, hey, listen, I think that, at your age and with your knowledge that maybe this might be the best strategy for you. But certainly at your age and with your know-how and your knowledge, you could do a lot better than that. and you could actually, people talk about a lost decade, right? Stanley Druckenmiller talks about that likely throughout the rest of this decade, we could be looking at something like what we saw between 2000 and 2010 inside the US stock markets. Japan has never recovered from their 1980s highs. It's been 3 decades and the Japan equity markets have never made new all-time highs. I mean, it could happen with Bitcoin, and you want to be not only prepared, but put yourself into a position of power. If price is going sideways over the next several years, by the way, it's not going to flatline and go sideways. There will be plenty of opportunity on the upside and downside to go ahead and do that for sure. All right, everyone. Thanks for the session. Thanks for being here today. Jamie, solid, strong session. I hope that you enjoy it. Please let me know what you liked and appreciated most from it. If you're watching this on the replay and you had any ideas about price making a new all-time high in 2023, please let me go ahead and know if it makes sense to you that in order for that to happen, we would need to be seeing some type of massive pivot in Fed policy in order for that to happen. Everyone, thanks for being here. If you have a minute and you haven't yet, on your way out, please go ahead, hit a thumbs up. Everyone, I'll see you all later. Have a beautiful day, everyone. God bless you. I'll talk to you soon.